You need these goals to be able to start achieving something. Otherwise, you're just be going in blind. And then your next step is actually understanding the chart and utilizing a system that works for you. Okay. For me, guys, it's sticking to one pair, and that pair is gold. Okay. I dedicated almost 3 years now just to sit here and look at the charts and understand how gold flows. This is where certain indications came into effect with me. Make sure you're taking notes. Okay. The first step that I do is I go to the 4 hour time frame and I start looking at highs and lows. So for example, like yesterday, if you guys saw my Instagram, I posted where I see the market could be possibly heading just based off of a high and low strategy and using Fibonacci. So first step that I do, guys, is I go to the 4 hour time frame and I look which way the market is flowing. Is it flowing up in a bullish market, or is it flowing down in a bearish market? And as you can see here, guys, a bullish market. It's already heading, it already made its move. It's made its way up. And how can we tell from that? So from looking at the past, that's the next step that I do. So I go from the 4 hour time frame, guys. I look at the past to see what was the previous low. And as you can see here, this right here has been the previous low. So what do I end up doing next? I actually bust out my favorite tool, which is Fibonacci. If you guys don't know what Fibonacci is, I really recommend you guys start doing your research on it, because there's so many ways that you can utilize Fibonacci. With this, you're actually able now to do it with trading, which is crazy to me, because people realize there's a method to using this. And how do they figure out that method? That method is by emotions. From yesterday, what I did was I figured out, so I'll bust out my tool here. I figured out that this was the low, the previous low. Okay. And how did I do that? By zooming out, because this was the previous high before, and it made its new low over here. So this is how I know now which way the flow is moving. So it's been flowing up. So it's made a floor. So I'm going to draw this up for you guys so you can visually see a floor. So this is how I know this was the floor. Okay. This is a new floor that it made. And it made a previous floor over here as well. So you could drag this way now to continue it. So now that I establish what the floor is, I look for 1 to 3 touches. So here's one touch because it broke through here and it had to retest. Okay. Came back down to the floor again, but it didn't break through this floor here, guys. Okay. And this is where my moving averages also come into effect. So see, if you notice this white line here, that's the 200 moving average. Okay. I say this all the time to a lot of people. The market will always make its way back to this 200 moving average. The trick is now is to start figuring out when is it going to start making its way back. Okay. And this is where things start playing into motion. Okay. So we see that the market has been away from this 200 moving average for a little bit, and it doesn't like to stay too far away from it. So for me, I wait for certain indications for when the market is going to start heading down. Okay. That normally is, especially on the 4 hour time frame, is when it makes a full break underneath the 50 moving average, and it stays underneath the 50 moving average, like how you see here. This is just a small example right here. But as you can see, it was carrying up, and then it made a decision to stay underneath and continue making its way back down to the floor. What all I'm waiting for now, guys, is, so this was all last week from back testing. So now, like how you saw from yesterday, the market just moved and broke. This is what I call, oops, let me fix this again. Mouse glitching. This is what I call the ceiling, guys. So this is your zone from here to here, right? Why? Because this is the previous high. The market did not break this zone the same way that it did not break this zone down here. So now you can see on the 4-hour time frame which way the market is flowing. So if it did not break this zone, you have an idea now in your head that the market is going to be flowing down. And a great opportunity for you guys to get into this trade using the indicators is, look, it broke underneath the 50 moving average. And on top of that, guys, if I bring out our experts strategy here, I go down to the 1-hour time frame where richest strategy will come in. You'll start seeing when you're able to get in using richest strategy, but also using Armin's strategy. Okay. So we broke it down to the 1-hour time frame now from the 4-hour. This is when you can start seeing more, right? Your eyes are adjusted. So you're already seeing that the market's flowing in a certain way. Now you have other confirmations now from our experts that breaks on top of us of this green line, like how it did here, and doesn't surpass this red line. It's going to carry into a what? A buy, which it did. It played in the middle and it made its way. This is how I started succeeding more, guys, is because of this, just applying two strategies that work together and applying my strategy as well that I was just learning on my own. Right? It's something that needs to be repetitive. So now what's amazing is I found a community that my eyes and their eyes visually see the same thing. So these are the breakdowns that I do. I start from the 4-hour, go to the 1-hour, see if Rich's strategy is pairing off with my strategy, see if Armin's strategy is pairing off with my strategy as well. And I wait. All right, guys, I wait for certain zones. So this is the zone that I'll wait for. I'll break it down now to the 15-minute time frame. Okay. I'll know what's the high and what's the low. And I'll mark the Fibonacci scale with it. Okay. So here's the 4-hour time frame. I know where's the high. I know where's the low. Boom. So there's the low, there's the high. All I do is do this. Mark from here to the previous low, to the previous high. And this again is on the 4-hour. So when you break it down, you'll see with the Fibonacci, like I said here, you go to the 15. There, it sets you up with your zones that you need to look for as well. Okay, guys. So now that I have an idea of which way the market is flowing, I'll do it again. I'll break out my Fibonacci on the 15-minute. Now I know that this is a low. And this is the previous high. I'll get rid of the 4-hour one. So now I have a clear idea. And if it stays, let me zoom in now. When I'm entering for a buy, because I'm just waiting at this point, I believe the buy's actually coming up sometime this week. The market just needs to bleed down a bit. I'm waiting for this zone here, guys. This is my golden zone from the 71.8 to the 50%. So since the market now is staying underneath this 50 moving average, which is this blue line here, I'm waiting for it to come down to my golden zone area. I'm not making any moves yet. I'm being patient because for me, I'd rather take one good solid trade and be done for the rest of the month than just consistently popping trades. For me, like for my mental, like not my mental capacity, but for me, it's more calming and to work that way than to just consistently just buy or sell. I'd rather wait for everything to align with my confirmations to start placing like my full trades, right? And what's great too is when everything starts clicking with my trades plus our educators, when they start sending out their alerts, that's when you guys will start seeing my results just start going bang, 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 because everything is just pairing off amazing with one another. That's why I that's why I love doing this thing, guys, because this brings me so much joy because even if I take a loss, utilizing proper risk management is amazing because even if I take that one loss or two losses, I'm not even close to my daily loss. And my daily loss is typically based off of the account that I have is $500 to $600. Okay. Once I hit that marker of a daily loss of 500, I'm done. But that also goes with your take profit, right? A lot of us like we reach for the stars. You got to think how much you guys make an hour at your job, right? Some of us it's $30 an hour. Some of us it's $50 an hour. If think about you just making $50 in less than 30, not even 30 seconds, and just closing that out and consistently doing that for, let's say, your job day for 8 hours, you're good. And that's just you clicking a button. So now the goal is what is your end of the day paycheck? That's how I did it. What was my paycheck by the end of the day? If it's $250, if I've made $250 in less than a second, I'm closing that out. I'm good. Right. Especially if you're just learning this skill set. If you've been in this skill set for a minute, you start learning, okay, I could leave this in a bit longer. Right. But if you're new and you're learning this and you're just starting to understand it, put that in your head. My goal is to make my work paycheck, or my goal is to make my phone bill. That's how I see success, guys, in the markets is me putting my trading to something that it could benefit with, right? Started with a phone bill, started with a truck, because I had a truck, started with a truck payment. Now it's, okay, how can I pay for vacations, right? How can I pay for a new home, a new place to go stay at? Or where do I want to travel to and live to next, right? That's why you can ask Brandon. I told him from the beginning, man, I really need you to set goals for yourself with this. I need you to set your daily goal, your weekly goal, your monthly goal, and your yearly goal, because setting all these goals are going to get you to your yearly goal. If your yearly goal is to make 100K, do you guys know how to make the steps to get to 100K with trading? Right? It's breaking down and understanding what your daily, weekly, monthly goals are. Okay. Those are like the key things. So your mindset with this is crucial. So those are the steps, guys, that I take when I'm looking at the charts. I look at my risk to reward. Okay. I already know what my monthly, daily, weekly goals are. Now it's time to apply everything that I've learned from our educators, plus from myself, from taking the time and doing this. And then my next step is, guys, I will go down to the 5 minute. For gold, I noticed the 5 minute time frame is when a lot happens in 5 minutes. Okay. But as you can see here, guys, my just by me marking up the high and low from the 15 minute, I look for points now that the market is starting to flow down. How am I seeing this? Because now look, here are all my moving averages. The blue is the 50, the green is the 80, the purple is the 100. All I'm waiting for now is for it to break underneath this floor, because it already created a high and a low on the 5 minute. And if you want to go above and beyond, what you can do is you can mark up your Fibonacci again. So I'll clear this one. That was the previous high. This was the previous low. What are we waiting for? The golden zone. So here's the golden zone, 71.8 and 50%. All I'm waiting for now at this point if you guys see now, all my moving averages are flowing together. But what I'm waiting for is it to break underneath this 71.8%. Here, I'll zoom in for you guys so you can see this clear. And there it goes. Top to 71.8 on the 5-minute. Now it's going to be making its way down to, I say, the 50. If it stays underneath the 50, guys, it's going all the way down to back to the floor, down to this moving average here, which is the 800 moving average. Okay. This is where I've been seeing my biggest success, guys, is when the market gets really close to my 1500 moving average. Okay. That's where this is where patience comes into effect, where sometimes you're going to have to sit on your hands for a little bit for this setup to happen. But once it happens, you're going to be smiling because it's going to go from here up or from here down based off of which way the market is flowing. So this is why I tell people to really start understanding market flow, because market flow is going to be, the trend is your friend. But yeah, these are the steps that I take when I'm looking at my markets, okay, especially gold. Now, I know a lot of you trade NAS as well. What I've learned with NAS is the 200 moving average works really, really well with NAS too. I don't spend too much time with NAS, like me looking at it as much as I do with gold. I leave that to the experts. I leave that to Rich and Brent because I know they know their stuff. But even jumping on their calls, and even if I'm not on their calls, I'll jump on their calls like later on at night because of the recordings, and I'll watch, and then I'll put two and two together and seeing certain points. So like for 9:30 market open when the bell goes off, I'll look at 9:30 and I'll see where that 200 moving average was at to see, okay, so is it going up or down? And if it's gone up, I'm going to see why, and I'm going to see where all my moving averages were at the time of that move. And that's how I start learning, okay, these are positions I should be getting into when everything is aligning this way. Not, and like I said, guys, not every single time I'm correct, right? There's some days where like I'll hit my one stop loss or my two stop losses and I'm done for the day, right? I've just learned now I don't have to trade every single day to make the amount that I want to make. Now I could just wait, sit patiently on my hands and wait for my setup that I like, right? Because you got to find a setup or a pattern or something that you visually see that you know is going to make or break you. Okay. As long as you're following your guidelines and your risk management and the tools that you set out to succeed with, you're okay. So another thing, guys, that I just really want to touch base on with you, you really, if you want to use my my moving averages, I really want you to understand the flow of the market. Okay. So for example, if you go to the 1 minute time frame, I want to show you guys something. Okay. So if you guys look, you see how everything's bunched up now? This is when I'm getting into the markets because everything is aligning for me. So the 200 moving average is right here, dead smack in the middle. Now, if I go down a time frame, I want you guys to see something. If I go to the 5 minute time frame, the 50 moving average, guys, turns into that 200 moving average on the from the 1 minute. Okay. So I want you to remember some. I want you to remember that. So now if I go to the hour time frame, that 50 moving average now turns into that 800 moving average, and it's making its way back to the floor. So remember how I was saying to you guys, there's a floor and ceiling. So here's the floor and there's the ceiling. Okay. These are moves that I wait for, guys. So if it stays on top of this line here, I'm going for a buy. If it breaks underneath, if it stays underneath it, I'm going for a sell. If it stays underneath the 200 moving average, I'm going down for another sell all the way down to the 800 moving average. But if it stays on top of this, it's just going to keep carrying up. But Mondays, guys, I want you to know it's more of a consolidation day for what I've noticed for gold. So you're going to see a lot of up and downs today. Tomorrow is actually going to be the day where moves are made. You're going to actually see, okay, the market is actually going to start flowing downwards or upwards. Okay. And then Wednesday comes around, you're going to get those last final pushes in a way. Thursday will come around. And that's where the market's going to be like a little fluctuating and be like, okay, what are we going to do? What are we going to do? What are we going to do? And then that's why usually a lot of traders don't trade on Fridays because the market will reverse and it'll either take you out or it will make you more. You just got to be vigilant. That's why I tell people you don't have to trade every single day. Make your profits that you were set out to make. And then once you're done making those profits, close your phone. Don't open the app until you know you have to trade. If your goal is to make $1,000 in a month and you made $1,000 in 3 days, you're not touching your phone for that month. You've made your monthly goal. That's how I base it too. My 2 week paycheck is X amount. If I make X amount in 1 to 4 days, I'm not touching my phone for the next 2 weeks. If you get paid bi-weekly, these are key things. Okay, guys, key amazing things. And this is what's going to keep your bank accounts up instead of down. I don't know if you guys know this. My man Mike Tyson back in the day, he was worth like what was it, $300 million when he first started. The guy went bankrupt. Why? Because he didn't know how to compound his money. He didn't understand how to move or work with money. Imagine 300, I think it was $300 million gone in a blink of an eye because you didn't know how to manage your money. If you start understanding how to manage your money, Mike Tyson probably wouldn't have been retired or biting people's ears off. He'd be a really, really successful businessman, but he knows that now. Because if you notice, things are changing with him. He's still a little crazy, but he's starting to understand the flow of money because he had to lose that amount to understand how it works. Our goal here is for you guys not to lose that amount, for you guys to listen, follow instruction, and follow the course. Okay, guys? So set your goals and achieve them. My man Andre, he always says, if the numbers put a smile on your face, close the trade. And that works. It works fantastic. Or if you start seeing an emotion on your face, if the trade's going the opposite direction and you're kind of frowning, close the trade. Those are emotions you got to start building. It's like, okay, you got to come to a point where it's like when it comes to trading, you don't have any emotions. You're looking at the chart. If you hit your goal, don't be jumping up like you won Warzone or something like that, right? Stay calm, cool, collective. Why? Because you did your job. You think baseball players, when they hit a home run or a grand slam, when they win their game, they're like going off. No, they know they did their job. I did what I was supposed to do. Let's move to the next game. Their goal is the World Series. Their goal is to perform the entire season to get to the point of winning the World Series. And then they will start cheering and going off. Yeah, they celebrate a little bit here and there, but their emotions are still calm, cool, and collected, even after hitting a crazy home run. You find ways to start calming your mind with trading, guys, and staying calm, cool, and collective. Sky's the limit. Do you guys have any other questions for me? I'm typing a little. Okay, yeah, type. Can you repeat that? Which color is which again? Oh, okay, yeah. So let me zoom down a bit. Okay, so these are my moving averages here, guys. I'll pop this up again. So the white line, move this over. So those are my moving averages there. So like I said, you'll see the flow with them, and the markets will always want to retrace back to them. It's just at certain points what you want to look for. So see how the market broke on top of the 200 moving average here? And it all like came into one strand. And if you look at the flow, everything starts falling on top now, on top of the 200 moving average, like a spider web. Okay. Which means the market is flowing up, but I'm just waiting for a retest, guys, in this zone here. That's all I'm waiting for a bit for that buy that I'm actually waiting for. But those are the things, guys, that I look for. And what helps me out too is a lot is breaking down the chart. So that's why those are the first things that I do. I break down the chart to see which way the flow is going to start moving and which way it could possibly go. So I know it's already in a bullish trend, so it's going up. Is it going to surpass this line, right? Because if you think about it, guys, this is now a new floor because it broke, made a new ceiling and broke on top of that ceiling. So it has to come back down and retrace this part here, which is here. It's just a really big patient game. And that's why I say you got to wait for certain setups and wait for your zone. And then when you're ready to pull the trigger, you pull the trigger. And if you notice, it's everything if by using the Fibonacci. So if I mark that previous high to this previous low now, my golden zone now is this area. For it to be a buy, guys, right now, I just needed to stay on top of this 38.2. And that's what will make it carry up further because it didn't surpass the previous low, which is down here. These are the tools that I use, guys. That's it. I use Fibonacci and I use my moving averages and I base it off of highs and lows. And once I see the market in a certain area that I see that it's fully in a bullish or bearish trend, that's when I pull the trigger, right? This morning I took a scalp because gold, I knew it just hit another all-time high. It needs to come down and retrace just a bit. So I was in and out quick as possible while making a coffee. And then you start learning these things, guys. Once you start breaking it down, how do you set your stop loss? So if you look at your Fibonacci, as you see here, okay, if you enter in, let's just say, for example, at a sell from here, down, right? Your stop loss is going to be just above double zero, okay? Just above that area, okay? So that's why, like, I like to wait. I will wait for the retest. So I'll wait for this to come down, right? This will probably come down to the 23.6, retest to the 10%, and I'll put my stop loss just above the high for the sell. Because what you want to do, guys, is you want to sell high and you want to buy low. It's at a really high point right now. It's at an all-time high. So if you would have got in right here and pushed sell, you're in a good position right now. But I also want you guys to take into effect too. You need to know your time zones of when you like to trade, right? I've been noticing me personally, I've been starting to like London session. The market moves really nicely for me with London session. And then come New York session, it's following the opposite normally what I see. So that's why I wake up early because come 7:30, that's where the market for me is starting to like make its decision of which way it wants to go. But so now at this time frame here, we got 3 minutes left. We're going to see if it stays underneath and make its way back down to the floor or continue up past the ceiling. If it continues up past the ceiling, guys, wait for that retest and pop that buy because it's going to come back to this area, general area again. it breaks underneath this floor, you're going to wait for the retest underneath this 91%. If it doesn't break on top of that, you're going for a sell, and you have an idea of where you're selling it to. So if you sell it from here, you know you have 3 points. So 1, 2, 3 to take profit.
Yay, is that Asia high and low?
Well, where?
Um, when you said the ceiling floor and the like, you know how you have that yellow line that's going
Yeah.
down?
So here's the Asian
That's your
high and
Asia
low.
high and low. Let me see.
This is on the 1 hour.
Which on the 1 hour, which one is your Asia high?
So see the green line here in this red line?
The green line. Mm-hmm. Okay, with the green line,
And the
the
red.
high in the red. Oh, okay, got it.
Yeah. So like that's why I did it like that. So for me, like visually, if it stays underneath this red line, I'm already cluing in, okay, it's going to be a sell.
Mm-hmm.
Right?
Mm-hmm.
Same with the green line. If it stays on top of that green line there, in my head, I'm cluing in, okay, it's going to be a buy. So see how it's down here on the low,
Mm-hmm.
right? If you notice, gold likes to retrace itself to like certain zones. So that's why I like looking to the past. So that's why I marked this square up over here, because that was the previous high for it.
Mm-hmm.
And if you look over here, this is the previous low. So if you put another square here like this, right, you can see it. So there's one more. So that's why I like looking at highs and lows, because this was the like if you look right across, this is the whole zone. So look for certain touches with this. So since it already retraced back, like here, let me clear all this so it's clear. So if you see how it came up, made a new high, and then came back down, back to the floor. I look for 3 touches, and it did 3 touches. So here's one touch. It touched the floor once, touched the floor twice, and it touched the 200 moving average. This is where you could pop a buy. This is a holding buy though. You could hold from here and pull out your profits here because it didn't surpass the previous high, right? Close out. You could wait again because you're going to wait for this retest over here to see how it all bunches up into one solid line. For me, that's like, okay, the market's making a decision right now if it wants to stay above this floor or break underneath it. And it stayed on top of the floor. If you want more confirmation, like I said, you take your Fibonacci tool, you go to it, okay? Oh, let me reverse it, sorry. So if you look, where did it pop off of from marking that high to the low? It popped on top of the 50 moving in the golden zone area. So this whole zone was your area. This was the consolidation area. All you're waiting for is for it now to just start building a stairwell. And that stairwell starts from this point here. Because you got to think now, if you got in at the 50%, right? You got to think your stop loss is going to be just a little bit past this lower low now. So that's why like I like to wait for it to at least be around the 71.8% for me to get in, because it's less risk for me to if it does reverse and come down this way, right? So that's why I break down the charts, guys, and then I just align everything all together. So now that it made its move from that lower low to that lower high, it's made a whole new high. Now I know that this is the new floor down here. I bring my Fibonacci up to here, and I wait for the same thing. I wait for it to get to what zone? The golden zone, the 71.8 and 50%. If it stays in between this zone and stays on top of this zone, it's definitely a buy. If it breaks underneath the 71 and stays under to like the 85 to the 100 zone, it's going down to a sell. Full blown sell where it's going to carry completely. is when it breaks the 100%, breaks through, retests its way back up, and then collapse back down. It doesn't break above the 100%. The market will try to like psych you out. So it'll go like maybe just a little bit past the 100%, right? But it will shoot its way back down because the sellers will start taking over. Those are things that I just pick up on and I start seeing, right? For you guys to improve more and more, you just got to practice. You got to give yourself an hour or 25 minutes a day just to get your eyes familiar with the chart, right? It doesn't have to be every single day. It if you want improvement, it should be every single day. But if you're the type of person that can't put in every single day, give yourself that 20-25 minutes a day just to give yourself something to visually see so you start understanding things, right? That's the only way you get better is by practicing. Back testing. That's what I use Sundays for. I go Sunday, okay, let's see what happened the previous week. That's going to help me see what's going to happen in the following week. Does it make sense? You got to think of it this way. Are you okay to place that one solid trade at 0.1? Or would you prefer placing a trade at 0.01 and place multiple trades? So what do I mean by that is, so say Joel calls out a gold buy and his stop loss is, let's just say, 3,080, for example, right? And the market now starts carrying down, carrying down, carrying down. But you placed your buy here at 0.1. Your heart's gonna be fluttering a bit because you're gonna see that it's gonna be at least around $200, $300. So if you do it at a 0.01, you could pop one here, one here, one here, one here, one here, because you're able to place 0.01 trades with that 10K account because that will add up to your 1%. Does that make sense?
I think my question is like right now, it seems like it's consolidating, trying to figure out where it wants to go.
Mm-hmm.
But my issue is like I wait for the consolidation, but then it'll do its big move, and then I already lost my entry.
So this is an opportunity for you now to like actually go back and back test, right? Because you see the move happening and it made the move. You might just be getting in late, right? So like for example, we could have got in over here if we placed the
Right.
yeah, like we could have got in right here,
Exactly. Mm-hmm.
right? The whole thing for you is now is like that's why back testing is key because you got to look back here. For me, like I know I should have got in for a buy with this candle, with these candle bunching over here because it never broke this low,
Mm-hmm.
right? So it came up, it retested. You could have got in here, made profit here, wait for the retest here because it still didn't surpass this low. A lot of the time,
And that is the low. So 1 second. So that's the low. Say, because I don't know what day. What day is this?
this is March 25th, right here.
Okay, like a Wednesday. So you're just looking at the previous day low and high.
Yeah,
And if it doesn't break the previous low, you know that it is consolidating, but it's just getting ready for a buy.
exactly. Right. So what people, so
Okay.
like to
Yeah.
be, yeah, so like to be like full
Mm-hmm.
blown where like, okay, you know it's getting in for that buy. So say you miss this here, say you miss this here, right?
Mm-hmm.
You're seeing this, you now know, okay, this was the previous high. It surpassed the previous high. Wait, wait for that retest, right? Wait for this retest because it popped, came back down. Asian range came into effect, didn't break the Asian range, and it started carrying even more.
Mm-hmm. Got it. Okay.
You
Yeah,
see that?
yes, I see it because sometimes when I see it going to a high and then like Joe will call, well, he's been getting better at that, but sometimes he'll call a buy, but it's at a high. And I'm like, oh no, it needs to retest. Either it's gonna retest or it's just gonna completely sell because you're really not supposed to buy at a high.
Exactly, right? But like, see, that's good that you know this, right? Because like I think we get all caught up sometimes like, oh, we have to take a trade because it was placed. I know we have so much trust in our educators because they're unreal. They're like I've never seen numbers like how they pull off, right? I think we have just so much
Mm-hmm.
confidence and trust, right? Sometimes you do like you can trust yourself and be like, hey, I'm good. Like I see this going this way, right? That's where the
Mm-hmm.
emotions come in because like now you're hesitant to even take that trade because you're visually seeing this happening. So that's why just sit on your hands, right? If it just so happens that Joel's trade makes that move that he said he did, then it is what it is. You wait for the next play, right? Because at least now you can analyze, okay, why did it move what of how he said and it didn't move how I thought it was going to move. That makes sense?
Yeah. Yeah, that makes sense.
Right? Like yeah, I could take every single trade possible that's sent out. Do I want to? Not necessarily, right? Because A, it's not following my trading plan. B, I've been looking at this for a minute now, so I could kind of see which way the market's flowing. But if you're ever second guessing yourself, don't even bother trading, right? Because that's a side of emotions that you want to overcome because you want to like I said earlier, you want to be able to jump into a trade and have no emotion to it, whether you lose or whether you win. Is it good that you win? Of course. Give yourself a pat on the back, right? But you have to have zero emotion to it in a way. But you have to think too, right? Say you saw that buy, but you didn't get in when you should have, but it still went up into a buy like how you thought it did. Man, that's amazing. You still saw where the market was going. Now it's just like let's hone in a bit better on pulling the trigger, right? A lot of us are just hesitant to make a move, and that's understandable. We're humans, sometimes our emotions get the best of us. But I like to think of the aspect of what if I don't take that trade? I don't like that thought. What if I took that trade? Oh, you know, sometimes it's good to be patient, sit on your hands and don't worry about it. You're not going to like the market, like I say all the time, the market's not going anywhere. You're going to have an opportunity to get back in and work the magic that you've been learning. But yeah, guys, I hope this call helped you guys. I'm down to run another one and break down even more. So we did a bit of emotions and what I look at today. I want to get more further down into how you can actually start waiting for setups and everything. But yeah, guys, thank you all for showing up today. I appreciate every single one of you. Just reach out to me if you have any more further questions. But yeah, guys, I hope you guys have a blessed and fantastic day, and I'll definitely see you in the chats.
Thank you.
You're welcome, guys. Take care.